Welcome back, everybody, to Real Talk. And this week we have another special guest. And this week we're actually calling it Girl Power because Mike and Steff are not with us today, but that's okay. We have Ashton with us today. So we're going to wrap it into a Girl Power event today. And I'm going to let Jen introduce our guest today.
Well, thank you, Leanne, and welcome, Ashton. So welcome back, everybody. As Leanne said, Steff and Mike aren't with us today because they're busy with their 9 to 5. So Leanne and I thought this was a great opportunity to turn this into a girl power episode. And strong, smart, independent women are something that we try to be and surround ourselves with and raise. For those of us that have daughters, we're doing the best we can to turn them into strong, smart, independent women. I feel like some days it's easier than other days, but I'm sure we'll get there in the end. So I am so excited to welcome Ashton to our podcast today. Welcome, Ashton.
Thank you. Thank you guys for having me on.
You know what? We've been working on this forever, trying to get Ashton here. And it's been like everybody's schedule kind of has screwed up at least once or twice. But I know we've been trying to get you on an episode since like last spring. So I'm extra excited that we finally found an hour or a half an hour that we could all sit together. Ashton and I connected through my brokerage. We're both real estate agents here in Sudbury. And Ashton's also an investor, which made me immediately interested in her story and what she's doing and what she's into. And after I kind of got a little bit of her background story, I realized right away that it was different and it was interesting. And it's so relevant to what we talk about and the kinds of things that we're all trying to do. So again, welcome, Ashton. And I would love if you could give us just a little bit of a brief background on where you came from and kind of what made you want to get started in real estate investing.
Okay. So kind of where I came from. So I come from a small town up north called Iroquois Falls. So it's near Timmins. Mm-hmm. And so I moved to Sudbury for college originally. And I kind of took like a few different programs. A lot of them kind of fell into the scope of what I'm doing now. So I had taken carpentry. I took my home inspection courses, some other business courses as well. And then, of course, real estate. So that's kind of like my educational background. It's a little bit all over the place. But I kind of knew that this was the direction I wanted to go. Mm-hmm. So growing up, like I watched a lot of like HGTV. Like I really liked like Property Guys, Love It or List It, that kind of stuff. The idea of like flipping houses was always something that I wanted to do. And it's something that obviously like starting into it when you don't know anyone doing it, it's really difficult. I wasn't born into a family who's doing this kind of stuff. I'm kind of just on my own. So yeah, I kind of just decided to start investing at one point. I read a lot of books. I did a lot of like learning, talked to some people, and then kind of just decided to jump in. So in terms of investing, I have 2 properties that are duplexes. So both of them, I bought as single family homes and converted into duplexes. One thing about me that's different than most realtors and most investors is I'm very hands-on. Mm-hmm. So with my background being in carpentry, I did a lot of that work myself. I didn't have a lot of help aside from people that I hired, but to try and cut costs, I tried to do a lot of it myself, which I want to kind of get more out of in the future. Mm-hmm. Especially now, like I'm a realtor now and I want to focus more on helping other people build their portfolios as well as being able to like grow mine, as well as kind of working on like opening businesses and stuff like that, which I know I've talked to Jen a little bit about, but I'm not sharing much details yet publicly.
No, we'll keep it zipped for now. That'll be another episode if you want to talk about that later on.
Yeah. So I'm kind of, I do a little bit of everything, and that's just how I am. I'm not really good at just doing one thing. So I do, in terms of real estate sales, like I mainly do residential and multifamily sales. Mm-hmm. I am kind of looking at dipping into commercial as well. That's definitely something that I'm more interested in, but it's hard to break into that market. I also
It is, and there's a learning curve to commercial too. It's like it's a totally different game. So that's one of those things. It's tougher to break into, and you need somebody to mentor you that kind of really understands it themselves and is good at it. That's going to teach you how to do it the right way.
Yes, exactly. Yeah, so that's kind of something that I'm not rushing into it, but it is something I want to do more of in the future is commercial, both like rentals and sales.
Yep.
Working with primarily investors, obviously, like it kind of makes sense for me to go in that direction as my investors grow their portfolios.
Mm-hmm. For sure. Well, and it's more that you can offer to them, right? If that's where your priority lies and that's where you want to see your growth, then you want to kind of be able to offer as much as you can to hit the widest spectrum of people at once.
Yeah. And that's another thing in terms of working with investors, because most of my people that I work with, they don't live in Sudbury. Most of my clients are based out of the GTA. A lot of them never drive down. They don't come and see the properties. They want things done very turnkey, even if they're doing renovations and stuff. So recently, I'm sure you've seen on Instagram, I partnered kind of with a contractor who I can pass my work off to. His prices are better than most, which is obviously really ideal for the investor.
Sure. And odd. It's tough. And I mean, it's tough to find a contractor.
Yeah.
You know what I mean? That's kind of that middle of the road pricing and can get the job done properly at the same time. So hang on to him or her or whoever that is.
Yeah.
For sure, because there aren't a lot of them floating around.
And like one of the biggest things is they work very quickly compared to any other contractor, which obviously that pays off.
For sure.
Because then for investors, you're cutting back on your holding costs.
Yeah. And time is money, right? And everyone's time has value, whether it's yours or your clients or the contractors. And you know what, if the quicker they can get in and out and get a job done and get tenants in and the money moving, the happier everybody is.
Yeah, exactly. And that's why now I'm kind of going in a direction more where I'm trying to help my investors do something like a little bit more turnkey, where I can help them kind of start to finish from the purchase to getting it leased out. I don't do the management aspect because that's just not something at this time.
None of us want to be property managers. Exactly. We're okay. We're okay with that. And I put that out there, right? I've never wanted to get into the property management game. And I'm happy to be an investor and let somebody else take care of that. And for us, that's very easy money to spend.
Yeah, exactly. And so I am helping out with like the leasing aspect on some, just depending if they're self-managing. There are some people I know that are doing just leasing, but I'm kind of offering that as well, depending on the area that the property's in.
Yeah.
And another thing that I'm kind of, along with working with a contractor, one thing that I'm offering mostly to just my clients is just to oversee the project, to kind of set a scope of work. Because one thing I've found is a lot of people that I work with, they don't have experience in construction. They don't know what's worth doing with renovations, like what adds value, what doesn't, what's really worth putting the money into. Like I've seen some investors on a house that I would have put 40,000 into, they're putting 100,000 into, and they're not really going to get the return that they're looking for.
That they're looking for right away. And that's the reality. They'll get their money back. It might take them 3 years, 6 years, 10 years, depending on what those improvements are. But most of them really like the BRRRR strategy, right? And they want to be able to put the money in and pull everything out as quickly as they can. But that's, I find, where a lot of investors struggle, is they overspend on stuff that's not going to kick back the value right away.
Yeah, exactly. And that's where I kind of offer that as like an additional service, kind of separate from being a realtor, depending how extensive, the amount of work I'm doing is. Yeah. It's more of like a project management kind of thing that I'm kind of starting to dip my toes into a little bit. Yeah. And, it's kind of setting the scope of work for them and, so that they don't really have to stress or try and figure out what is worth doing, because most people really have no idea. Like I said, I've seen some people just go completely overboard on the renovations, and I want to see less investors doing that. I want to see people making the profits that they're looking for. I'm kind of trying to give the whole experience, like start to finish, because I know that's not something that anyone else is doing. So I'm kind of trying to target that kind of market a little bit differently than most people. Yeah.
So if we can backtrack just a little bit. So you got into real estate investing.
Yes.
So what did that look like? What was that, how did you get into it and why did you get into it? And how did you find that first property? And what did that whole story look like?
Okay. So getting into real estate is actually kind of a funny story. So there's an investor who owns like a lot of properties. One of the largest, I think, real estate companies. I don't know if it's in Ontario or in Canada, but a very large company. He's only been to Sudbury a handful of times, and I believe it was his first or second time in Sudbury. I ended up running into him and having like a really good conversation about investing.
Mm-hmm.
And it was something like flipping houses, all that. It was always on my radar, but I was never like ready to like jump right into that. After having a conversation with him, his name's Robbie Clark. You guys may have heard of him before.
Okay. Yeah.
He's pretty big on Instagram and stuff. So so I kind of decided after that, like I was ready to just jump in and, like kind of just figure things out as I go. Like I read a bunch more books. I do a lot of audiobooks, stuff like that.
Mm-hmm.
And so shortly after that, I reached out and I started working with a realtor. And it's kind of funny looking back, especially now that I'm an agent, is I was looking at houses like before I had a pre-approval, they were way out of my price range. So it's like, it's really funny looking back on that because I had no idea.
I think all of us have been in that position, right? You don't know what you don't know.
Yeah.
Until somebody tells you. And then it's like, oh, but I thought I knew, but very clearly I don't.
Yeah. Because I did want something that I could renovate and put money into. But then I was also looking at, for example, like there was one really nice overpriced triplex at the time.
Mm-hmm.
The market caught up to it, but at the time it was like very overpriced.
Yep.
And like I fell in love with the property, but then I was like, well, I don't know if I want to put all my money into this and then I can't buy anything else after.
Right.
So I looked at quite a few different places, and it was kind of like with when you're buying a house or buying an investment, you don't really know what you want until you look at places.
Mm-hmm.
So, I looked at places that were like more run down, and I looked at some more turnkey places, and I had an idea of what I was looking for. And once I got a pre-approval and all that, which wasn't as easy as I thought because I had been claiming self-employed for a few years. I didn't have a full 2 years at that point. It was a little bit more difficult than I anticipated. The first mortgage broker more or less laughed in my face and told me come back in a couple of years, which was like really discouraging. And I kind of, for a month or so, I kind of just accepted it. And I was like, okay, like, I guess I have to wait. And then I was talking to a friend who was also self-employed, and he's like, well, like my friend's a mortgage broker and like he was able to get me one. So I reached out to a different mortgage broker, and, he made it happen. It wasn't necessarily the best mortgage that I could have went with, but at the time I was just happy to get something.
Yep.
So it's really funny looking back because, had I done it all over again, I would have done things a little bit differently.
I think that's pretty standard, right? We all kind of have our beginning stories, and nobody starts out. And I know we didn't. And just because I know Mike and Leanne's story, they didn't either. I mean, and it's true. You don't know what you don't know. And if we could go back, you know what? We likely weren't in the right mortgage product for what we were looking to do. And we didn't have the knowledge base, you know what I mean, to kind of grow where we wanted to go. But everybody has to start somewhere, right? So I'm a big believer that starting anywhere is better than not starting at all. And most of the time you'll get it almost right. Yeah. You know what I mean? Like there are some people that it goes wrong right from go and they really can't recover. And I don't mean to laugh because it's not funny when you're that person. But people like that too have likely been spoken to by people who tried to help and just don't want to listen. And that's the reality of it as well, right? Yeah. So, I mean, we all could have done a little bit better at the beginning, but the bottom line is now you know what you need to know. So the moves forward are better.
Yeah. And I feel like most people could say this. I made a lot of mistakes on my first purchase.
For sure.
So the nice thing, so it was like off market. It was something that was previously listed by like my agent. And yeah, so he reached back out to the guy who was selling and said, "Are you still interested?" And I went and looked at it, and it was exactly what I wanted.
Yep.
So I was like, I want to put an offer. And the price that they were asking when it was listed, which was, I think, a year or two before I was looking at it, I was like, well, why didn't it sell at that price? Like, it's such a good price, even, pre-COVID market.
Yeah.
So I put an offer, we negotiated. I ended up, getting an accepted offer. I got my mortgage on it. So that part went pretty smoothly. The renovations were kind of what I anticipated. It was a lot of learning, and it took longer would be like the biggest thing, but I feel like that always happens to everybody. Everything always takes longer than expected. But when it came to the refinance piece, that's where I kind of, I hit a roadblock because I had purchased under my personal name, and nobody had explained to me that if my maximum purchase price is $250, I can't refinance at a higher price afterwards. So that was kind of like the first roadblock. So it was like I had the option. It's like, do I put it into a corporation or do I just leave my money in there?
Yep.
Which obviously, opening a corporation, going through a lawyer and an accountant, it is a little bit more expensive. And then having to transfer it over to the corp, I had to pay land transfer taxes.
Yep.
So it was like a lot of additional expenses that I didn't anticipate. The biggest one that I ran into, and this is where, my knowledge now is way different than back then, but I was put into a fixed rate mortgage. To break that 8 months in.
Yeah.
Good penalties there.
Yeah. We've all been there. I know we got hammered our last round of refinances because we just didn't know, and you don't know what you don't know.
Mm-hmm.
Yeah.
Yeah. And you know what? I'm glad I made all these mistakes, because now I can have that conversation with clients to be like, okay, be careful of this. Like, if I know their budget is 250 or 300 and they want to do the BRRRR strategy, well, I want to make sure that they're set up for success and they're not going to run into the same thing that I did.
Right.
Because for a lot of people, opening a corp just makes more sense.
Yeah.
And obviously, as a realtor, I can't make that decision for them. But I make sure they consider their options with that.
Yep. No, and the whole corp thing. I mean, we've all three of us sitting here, right? We've had that conversation, and we've gotten into it at different stages of investing for different reasons. And I'm a big advocate. You're going to likely do it anyways. If you're interested in growing this and being serious about it and really scaling and putting a lot in, a corp is where you're going to wind up anyways, whether you go in now or you're going to go in down the road. You pay more now, or you're going to get just smashed with that land transfer tax on multiple properties down the road. It really kind of, it's 6 of one, a half dozen of the other, right? It's pay now or pay later. You're still going to pay, and you're going to wind up in the corp anyways. So, and that's one of our learning curves too, right? I just would have done that at the beginning, because I just look at us now trying to, some stuff's in the corp, some stuff's not in the corp. Like, it's a bookkeeping nightmare. And that's where my investing anxiety lies. I love every aspect of it except reporting everything. So, and
I think that, Ashton, you made a good point. And obviously, because I'm a mortgage agent, a lot of people don't realize that. They think I was approved to buy for $250,000, but they don't understand why they were only approved for that, right? Because their income only supports that. And that's what lenders look at. So no matter if you have a rental property, you're going to get a little bit of rent offset because of your rents coming in, but it's not going to mean that you can go buy $1 million now, right? So we always say a good rule of thumb in the mortgage world is, if you take your gross salary or your wages for the year, which, for easy peasies, 100,000, say. So say the household makes 100,000, you multiply it by 4. And that's basically what your gross max mortgage is going to be. So 400,000, right? Now, if you have a lot of debt, that's going to carve that back. So that's kind of the easy way to say that's my max mortgage amount. less my debt as well. So, but a lot of people don't realize that. And it's an eye opener when we talk to investors as well. And we say, okay, that's great. You got one property under your belt, but let's see what this looks like if you want to go again, right? And this is what you're going to be up against. And, but a lot of people are not educated that way. And it's very unfortunate that
No, it's true because people get in with the best of intentions, right?
Mm-hmm.
And they want to grow and be successful. I mean, we're all part of these different investing groups where motivation is high and ambition and sharing and networking. And it's all really fantastic, but you need to be structured for what works for you because everybody's story is a little bit different, right? And everybody has different things going on that affects their buying power, that affects their debt ratios, that affects all of those kinds of things. And can really slow you down. And you don't want it. Once you're motivated and you're educated and you're interested and you want to move, you don't want to be held back because of, something like that you need to kind of take care of first before you can grow.
Yeah.
And the other thing with fixed rates, and sometimes you have to go into a fixed rate because, let's all face it, once you get into becoming a real estate investor, the more properties you get under your belts, the higher risk you have. You need, higher ratios, and the B side takes that for you, right? Mm-hmm. But in the B side, it's all about fixed because that's what they want from you. But there's solutions around it. Like right now, for example, interest rates are, so out of whack right now compared to what we've been used to. A good strategy is if you have to go into a 1-year fixed, right? Until the market settles, and then you can go again. So it's just a small period of time as opposed to a 5-year fixed, which is a long period of time. And then you get into that penalty that really is harsh sometimes. So there are different strategies that if you have to go into a fixed, to really look at different options.
Yeah. And that's something definitely I wish I knew when I started. Because I think that's a huge piece that I was really missing when I started investing. I didn't educate myself enough on the mortgage side. I really just put my trust into my broker or agent and hoped for the best. Because there was just a lot of things, and I know a lot of things were explained to me, but I didn't understand it. There was so many things that I was learning, just buying a house and investing and everything.
Oh yeah, it's a huge learning curve in every aspect with your first one, right? What it looks like sitting with the lawyer and signing the papers, what it looks like signing the stuff at the bank, what it looks like actually getting the keys and walking through, and if something's wrong, it's a huge learning curve in a ton of different areas when it's your first one. And the fact that you did it as an investment and you were looking to improve it and renovate it and turn it into 2 units from one and do all of that kind of cool stuff. That's a huge learning curve.
Yeah. And I know a lot of people thought I was crazy because my first one, I just jumped right in and I did this huge BRRRR, and it was scary. I put a lot of money into the house and, because I bought so I closed in March of 2020. Is that when COVID started? Right when things were shutting down. So that was a little bit scary with just everything shutting down and not knowing what was going on. But I bought this house and, I kind of had no choice but to just do what I had planned.
Yeah, it's you're in. Now you might as well. You got to swim. So off you go.
Yeah. So the cool thing with that was with the market increasing the way it did, it really, paid off for me. So, initially my ARV was supposed to be around 350, maybe 400 if I was really pushing it. Mm-hmm. And I ended up getting, I think 425.
Which is great.
Yeah. And now it's worth, I'd say over 500.
Yeah. Thank you, COVID market.
Yeah.
It's crazy. I definitely considered refinancing a second time, but I decided I'm just gonna leave some money for a bit now. Yeah.
No, that's fantastic. I think that's such a great story. Oh my gosh. And it's true. And you know what? I'm a big believer in you can't time the market because the more you try, the likelihood is you're going to lose out and you're losing time in the market by trying to time the market. But people that got in just kind of as COVID hit and really panicked thinking, oh my God, there's a pandemic and this is the sky is going to fall and this is going to be the worst thing ever, I think we're happily surprised with what the markets ended up doing, right? A lot of people made a lot of money in the last 2 years.
Yes.
And I don't even think they necessarily started out intending to do that. I just think that that's the beauty of a market like that, right? And those don't happen very often.
Yeah, and I mean, both of mine, like I got very lucky that both of mine I bought in great areas, and I got them both under 300,000. Even buying at the beginning of 2021,
right?
Which, you know, I think that one, I don't remember the purchase price, but I think it was around 50,000 under market value that I got it at.
Which is, again, a happy surprise.
Yeah,
sometimes we'll give you those.
And that one was on market, but I completely lucked out because they had an offer that fell through, and I just, you know, I went in at the right time.
Yeah.
And that one I refinanced, I think, around the same price. So both of them, like I made quite a bit off of. I did what people call the perfect burr, which in a market that's going down, you can't really do that so much now.
Right. No, it is. It's a challenge now for sure.
It's a lot harder. You have to get a really good deal, which is very hard to find to start with.
Yeah.
You know, and that's a really hard conversation I have to have with a lot of investors right now. You know, investors that I'm working with is the reality of the current market and the fact that you're probably not going to be able to pull 100% of your money out right away. But if you're planning on keeping this property, it's going to bring you money in the future.
Yeah, if you can't get it out the first time, it might take you another year or 18 months or 2 years. The money will come out. It's just, it's like a burr you have to stretch out a little bit. That's all.
Yeah, and that's where, you know, in this market, what I'm finding is more worth it is more of like a long-term burr, which a lot of investors don't like that because you're not able to scale as quickly. You know, you can't pull all your money out and just keep going right away. But you know, it's the reality of the market. If you want to get in investing, well, get into something now because the longer you wait, you know, like you said, trying to time the market just never works.
No, you just wind up losing time in the market. And it's
exactly. Yeah. Even looking at people who, you know, when prices did start to go up in 2020, they're like, I'm just going to wait. Well, now interest rates are up. So your monthly payment is still super high and prices are still higher than they were then. They're a little bit lower than the peak, but ultimately you're still paying more and it's not going to go back down to where it was.
No. And I mean, it all comes out in the wash. So, I mean, really for all, and when we all on the real estate side, all worked with buyers during COVID that were like, I'm just going to wait. I'm just going to wait until the market comes down. I'm not paying these prices. And those people still don't have a house, right? They still don't have a property and they're still waiting. And it's like 2 years ago, you know what? Yeah, it might have been a little bit overpriced, but if you can kind of widen the lens and look bigger picture, values have grown so much. The market will catch up, right, to those overpriced places, and it all balances out in the end, anyways. Like, and we're long termers. I'm not a fix and flipper. We're not looking to sell anything or get out quickly. So even if we overpay, which we've done a time or two, right? Like, let's be real. The last 2 years, if anybody bought anything, they likely overpaid a little bit. But that all balances out in the end. And really, I remember having a conversation once and it was like, well, if you bought in the peak of 2020 or 2021 or whenever the market was hit its highest, I think it was actually January of 2022 or February, somewhere in there. And you know what, if you bought in that time where it was the highest that it had ever been in 20 years, what's it going to matter? You know what, you bought at the high point in 1 year and you have 5, 10, 20 years to look at it, it's not going to matter.
And that's where, you know, looking at what people's goals are with purchasing, right? Because I know, like, I've heard of some people who they actually overpaid. They decided to buy off market, overpaid. I want to say like at least 50 to 100,000. They overpaid for the property in the hot market. So like they overpaid on top of like the peak of the market. And now, you know, not even a year later, they're thinking of selling, but they've already overpaid. So it's not, you know,
it's not going to work.
It's not a good situation to be in.
Yeah, no, and I mean, again, trying to time the market, that's bad timing, right? And they likely have a mortgage broker that's looking at them going, oh my gosh, what are you doing? Right?
That's exactly it.
So, okay. So my question then goes to, like, you've got such a great story and all of this experience. What's next? Where do you think like for your portfolio? And I know that you're growing as a realtor, and I know that you're growing your business in terms of what you can offer to investor clients. And I think that will generate a lot of interest in this episode. But like you personally, like what's next for you and your portfolio? Are you okay just letting it ride for a bit while you try to build other stuff?
Yeah, so right now I've kind of like my investing has definitely taken a little bit more of a back seat. I wouldn't say like I'm trying to like time the market or anything like that. I'm kind of just waiting on like the opportunity that I'm looking for, because I'm kind of like looking at more the commercial route, but very specific.
Yep.
I'm kind of like, keeping my eye out. I'm constantly looking, but I kind of like, I refinanced my second property. I have, money ready to go to buy the next one. But I'm kind of just, like I said, I want something very specific. So I'm waiting for the right opportunity to come up.
Yep.
And
that's okay. There's nothing wrong with that, right? You know what you want to do. You know what your goals are. So if you need to wait around until something that fits a little bit better shows up, then that's okay too.
Yeah. And I definitely I have been looking, I'm still kind of looking at single family homes and stuff like that. Similar to like what I've done with my other two.
Yeah.
But I'm a lot more particular on what I want. Like it has to be like amazing for me to jump back in and do another residential one.
Well, those single family conversions, right, to duplexes they're really popular up here, because they're relatively easy to do, right? And you can usually get into the market at a decent price point because you're buying a home with the potential to put that second unit in.
Yeah.
So that I know in our market up here over the last 2 years has been really popular.
Yeah. And I think the biggest thing that I hear from investors, especially like ones that they're working with other agents or they don't have an agent, they don't really know anyone in Sudbury and they're not local. Like contractors are very hard to come by. And I know this is an issue in every city, but and that's a huge reason why that's something I want added to, my service, that I can kind of provide that as well. Because they are so hard to find good contractors who actually show up. Yeah. And I know I've experienced that myself. So, finally finding someone who, does pretty good quality work. They show up, they're quick, their prices are reasonable. Like, you don't want to lose once you find a good contractor.
No, for sure. Hang on to that. Most certainly.
Yeah. So that's the biggest thing that I see with people. Like everybody wants to do a BRRRR, but then finding the contractors for it, unless your agent has connections.
Yep.
Because I know, a lot of the people that I was referring a year or two ago, they're too busy now.
Mm-hmm.
Everybody is too busy to take on more work. And if it's small projects, they really don't want it. So yeah, that's the biggest thing I hear from investors.
Yeah, that is a big piece of it. And I think that's an issue almost in every market.
Mm-hmm. Yeah. Mm-hmm. Yeah. All right. So we are, 33 minutes in now. And we're going to move into our lightning round questions. So it's the kind of the fun part of it. It's quirky. It's fun. It's just, we're going to ask 6 different questions. And basically, the first thing that's on your mind, that's what your answer is. Don't overthink it. Don't over-explain it. It's just fun. It's fast. It is what it is.
It's usually pretty funny.
Yeah. And it can be funny sometimes. So I will start it out. Okay. What is your favorite day of the week?
Ooh. Probably Sunday.
Really? Tell me why.
Sundays are usually I try not to schedule anything. It's just kind of my me day, my chill
day off.
Yeah.
Oh, that's cool.
Yeah.
I don't like Sundays.
I was the same.
Yeah, no, because I know that I have to do I have so much to do to get ready for Monday. Mm-hmm. So I think Sunday might be my least favorite day of the week, but it's our differences that make us special. So that's awesome. Okay, Ashton, choose one: a full-time career as a real estate investor or a full-time $200,000 a year salary position. You have to pick one. You can't do both. So guaranteed money or a full-time career as a real estate investor?
Investor.
Yeah, I
think so too.
Yeah.
We all agree on that one.
Yeah, for sure.
All right. Text or talking?
Oh, see, that's a tough one. It depends.
Yeah.
Um,
This one I find too is pretty generational.
Yes.
yeah. You know what? Like for a lot of things, like if I have to explain something, I prefer talking.
Mm-hmm.
But if it's just like a quick question, like text is way easier.
Fair enough.
Yeah.
I can get that. Okay, choose one. I get both of the choose one questions.
Yeah.
So a $30,000 a year cash flowing short-term rental or 30 long-term rental doors.
30 doors.
Yeah, me too. Without even really thinking about it.
Yeah.
I know some people will argue the quality of the door matters, but I would still take the 30 long-term doors.
Or we'll say, what did the 30 doors cash flow, right?
Yeah.
So there's arguments there. Yeah.
Yeah. Yeah, you're right. Fair enough.
Mm-hmm.
I still think I'd take the long-term doors though.
Take your risk.
Okay. So what is your go-to pastime?
Probably hiking.
With your dogs.
Yes.
I see it on Instagram all the time.
Yes.
Ashton's a dog mom and they're all adorable.
Yes. I have 3 dogs, so I am pretty busy.
Yeah, you guys spend a lot of time outside. I love watching your stories and stuff like that. I think it's great.
Yeah.
Okay, so last one. Next time around, you can only invest in one of the following areas. Which one would you choose? Michigan, Ohio, Arizona, or Mexico? So these are not Canadian investments. So I don't know if you've thought that broad yet, like if you're willing to invest kind of internationally. But if you were, where would you pick?
I'd probably say Michigan just because I know you have investments there.
And we could talk you through the process.
Yeah, exactly.
Oh, right on.
You have contacts there already, so.
Yep, I like it. That makes it super simple.
Yeah.
Okay, so you know what? That brings us almost to the end. Is there anything else, anything we missed, Leanne, that you want to ask before we kind of wrap it up?
No, I think we touched a whole pile of things today, which was really great.
Yeah, no, and again, I think you have such an interesting story, Ashton, and I think that it's going to be really well received by the people who kind of check the podcast out. And a lot of times we find there's people who reach out that want to get a hold of you for whatever reason. Sometimes they're looking for investor networking. Sometimes they're looking for conversation and people to kind of bounce things off of. You're putting out some great content as a realtor and as an investor focused realtor, and what you're offering to buyers and sellers in your market, which is kind of Northern Ontario and Greater Sudbury. If people want to get a hold of you, how do they find you? And if you're okay with that.
Yeah, you can find me on Instagram. My Instagram is AshtonAngelina_real estate. You could also get a hold of me by text or call. Do I put my phone number here? Or do you want to just link it in the description?
It'll be at the end. There'll be like a contact you section at the end. So if people want your number, they can text or give you a shout from there. And are you on Facebook? I can't remember.
I am, but I don't really use it.
Fair enough. And I think that's generational too.
Generational.
Yeah. LinkedIn. There are some people that are very heavily into LinkedIn. I've just learned this in the last 6 months.
Yeah, I am on LinkedIn. My LinkedIn is Ashton Corcoran. I don't really use it super actively, but I do have it.
Okay, perfect. Well, that's 3 great ways to get a hold of you, or 4 if you count your number, if people want to talk or text. Leanne, anything before we say goodbye?
I think we hit it all. I think it was a great episode. I always like when the women all get together. It's a great episode always. We have a good chat, and I think we had another good one today.
Absolutely. And like I said, strong, smart, independent women is kind of something that, Ashton, you fit right into that sector. And it's something that Leanne and I are really strongly invested in. And thank you for giving us your time and for helping us to keep it real, because that's what this whole podcast is about. And I'm already looking forward to kind of connecting to find out what you're up to next. So thanks, everybody.
Thanks for having me.
Right on.
Thanks.
Yeah, see you guys soon.